Welcome to the world of Forex trading, where fortunes are made and lost. Did you know that over 90% of Forex traders fail? But why? And more importantly, how can you avoid being part of that statistic? Most new traders dive into the Forex market without adequate education. They see advertisements about people making quick profits and think it's easy money. But Forex is a highly complex market. You need a solid understanding of how currencies work, economic indicators, and the political events that drive currency values. Without proper education, beginners make hasty decisions based on emotions rather than data. This leads to poor trade execution and heavy losses. Another key reason why so many traders fail is poor risk management. New traders often risk too much of their capital on a single trade. In Forex, the market can turn against you in an instant, wiping out your entire account if you're not careful. Proper risk management involves setting stop-loss orders and never risking more than a small percentage of your account on a single trade. Those who fail to do this are almost guaranteed to lose over time. Overtrading is another common mistake. Some traders get addicted to the excitement of trading and start making decisions impulsively rather than following a structured plan. They chase after every opportunity, believing that more trades mean more profits. But the truth is, in Forex trading, less is often more. Waiting for high probability setups and following a consistent strategy leads to long-term success. Emotions can be a trader's worst enemy. Fear, greed, and impatience drive traders to make irrational decisions. When you're emotionally involved, it's easy to deviate from your trading plan. Experienced traders know that sticking to a plan, even in tough times, is critical to long-term success. Mastering your emotions is as important as mastering the markets. Lack of discipline is one of the biggest reasons why traders fail. You might have a winning strategy, but if you don't have the discipline to follow it consistently, it's worthless. Discipline means sticking to your trading plan no matter what. Whether you're on a winning streak or facing losses, your strategy should guide your decisions. Many traders enter the Forex market with unrealistic expectations, hoping to get rich overnight. But the reality is, Forex trading is not a get-rich-quick scheme. It requires patience, practice, and persistence. Successful traders understand that steady, consistent gains over the long term are more sustainable than chasing big, risky wins. To avoid the mistakes most traders make, you need three things: education, discipline, and risk management. Learn the markets, stay disciplined with your strategy, and never risk more than you can afford to lose. If you can do this, you're already ahead of the curve. Forex trading isn't easy, but by avoiding these common pitfalls, you'll put yourself in the top 10% who have a real shot at success. Thanks for watching. Be sure to like, subscribe, and hit the bell for more trading insights. Check out these videos for more strategies and tips to enhance your trading journey.